So thank you all first for joining us tonight. Truly, we're really grateful you're sharing your time with us. We hope to get all of your questions answered. I'm just going to go over a couple of small things. So a huge thanks to Canvas Credit Union. They make events like this possible. This event is part of Colorado State University's Young Alumni Series tonight. I know a number of you registered through CSU, and then a number of you registered through Canvas. So you all made it here. That's fantastic. If you did register through Canvas, I'm going to pop CSU's registration in the chat. Feel free to fill it out if you would like. It's what's going to allow us to send the follow-up recording, any parking lot questions, copies of the slides, those type of things. So if that's something you want, we will ask you to fill out that registration. In addition to a huge thank you to Canvas Credit Union, I also want to thank CSU Alumni Association members. Members really do make events like this possible. They allow us to continue programming like this. And tonight we have everything from grad pack members, so folks who graduated in May, all the way up to lifetime members, folks who have committed to sticking with CSU for life. So thank you, truly. We couldn't do programming without you. And with that, I will go ahead and turn it over to Nancy Patton. Some of you are repeat customers. You know her. She's fantastic. And she has lots of good things to tell you on student loans tonight. As questions come up, feel free to pop those in the chat. As Nancy's talking, I'll interrupt her. I'll get your questions answered. Everything you send directly to us will remain anonymous, as will the poll questions tonight. So if that's a concern, just know that we do see your name on the questions, but the poll questions, or on the chat questions, but the poll questions are completely anonymous. And as we read the chat questions, we won't share your name or any specifics about you. But with that, thank you truly, and let's talk student loans.
Oh boy, woo! Hi everybody, welcome to Student Loan Strategies. Alexandra, I did just send you an email with someone who is looking for the link to join, if you get a chance to do that. Hey, our focus tonight's going to be primarily on dealing with loans that you already have, or maybe that you're considering going back to school and getting a loan. We're going to talk about how the repayment plans work, because there are a bunch of repayment plans. And then just a reminder that following this class, you'll receive an email. It'll have an evaluation. We'll send out the PowerPoint at that time, the link to this recording, and some additional resources. So watch for that coming from the Alumni Association. And here's a heads up. The last slide of this presentation is a resource page full of websites for further research. So plan to take a screenshot as we get close to the end, or a picture, whatever you need to get all those websites handy for you. I did put my email in the chat, so if you have a question we don't get to tonight, feel free to email me directly. And we are going to start with a poll, because what's the fun of doing a webinar if we don't do a poll? Alexander, you want to do that, or should I?
I am on it. Can you all see it?
I think there's 3 questions on this first poll. And so if you haven't done this before, just answer the questions and hit submit. And we'll share out what that looks like after a bit. Excellent. We have more than half of the people who voted. We'll give it just a couple more minutes. Let everybody get their opinions in there. Okay, I bet we could. 3, 2, 1, we're going to close it out and share the results. Let's see who's here tonight. Someone thinks student loans are fascinating. I'm glad. I hope you like my sense of humor. So we have a couple people that are considering whether their children are going to need loans, and then the vast majority of people tonight are here because they are in the midst of student loans. We're kind of all over the board on how much we owe on those loans. Everything from less than 5 to more than 40. with actually the majority of the people being in that higher dollar bracket on how much they owe on loans. So there should be some good conversation tonight about that situation. And then I threw this one in. I'm just curious, what would your life be like if you didn't have that student loan payment? Okay. And anybody who feels like sharing what that other thing would be that they would do, feel free to throw that in chat. And if it's super fascinating, like a Harley or something, let me connect you with my son-in-law who sells Harleys. But yeah, how is this saving? Charity, travel, I love it. So thank you so much. That really gives us a good feel for who's here tonight. And I appreciate you doing that. Let's take a look. Go ahead.
I was just going to say a couple others in chat include supporting a family, starting a small business,
Oh, small
buying a
biz.
car. So thanks for those of you who sent those to the full group and then directly to us.
Yeah, awesome, awesome, awesome. Thank you. And you can see how painless it is to share your thoughts. And so please do that throughout. This is a complex topic, and there are a lot of answers. No one answer is right for everyone. So sometimes we may have to say, I can't give you real specific advice, but other times it may be a question that other people have as well. So we'll manage it. You throw the question in, we'll manage it for you. Here's what we're planning to talk about. We have to talk about some trends, some numbers that are out there. Then we are going to spend a few minutes on savings, because if you can save money, then you won't need to have as much on your loans. So we'll talk through that a little bit. Some ways to get financial aid. Several of you were thinking that you might have people coming up in your life that need to access loans. So we'll talk about some ways there. And yes, we're going to talk about income-driven replacement plans. And yes, we're going to talk about public service loan forgiveness, all the hot topics. But we will probably focus more on lending, the situation we're in now, as opposed to preparing for paying for college. And then all those websites that we're going to mention throughout the presentation are on that last slide. So hang on for that one.
And quick question,
okay,
Nancy.
yeah, the numbers around student loan debt is big stuff. Part of this is that the cost of attending school has increased more than other life expenses have increased. In recent graduating classes, around 70% of the students had loans. About 14% of parents are taking out loans. And the debt, of course, is not just for our undergrad degrees, but graduates are older when they're getting finished with school. Part of that is that the field of study they've chosen requires more advanced degrees, but also many people are reinventing themselves after being in the workforce for a while, and they're going back to pursue some higher degree, even though they've been out of school for a while. The result of that is that, in fact, many parents are still paying on their own loans when it's time to send their kids to college. So there's just some trends going on with student loan debt. I'd like to comment on the fact that, it was just a few months ago that there was intense competition from employers for skilled workers. And so there was this idea that a benefit offered by the HR department for companies could be that the company would help you pay your student loans. And so you can see some examples of how that might work. We certainly are suspecting that that benefit will not continue as a hot trend coming up next year because of COVID, because of the fact that there's a much higher unemployment. And so that need to woo workers with this particular benefit has probably changed. But it was an interesting trend while it lasted. So if it costs so much, why do we do it? Well, even though the costs keep going up, the benefits of a college education still seem to be proven. It is higher lifetime earning potential. It is lower unemployment. It is higher job satisfaction. You put all of those together, And it's a very powerful tool, and one that parents like to see their kids choose, and that we as individuals often choose because we see those same advantages. So there are some multitude of ways to pay for school. Obviously, if you've saved up money, that's a great way. Don't forget that parents and students have income during the college years sometimes, and that can be applied to paying for it. Every tactic we can think of, such as living at home, attending an in-state school, having concurrent enrollment in high school is huge. That means that you don't pay for college credits, but your kids have college credits. Attending a community college for the first several years is a proven tactic, saving thousands and thousands of dollars and still resulting in a high quality education. Working summer jobs, working during school, absolutely nothing should be off the table when you are looking for ways to keep your student loans to a minimum. Once you've been out in the workforce, but you're thinking about going back to school, does your employer offer tuition assistance? Other creative ways to think about this is enrolling in the military, or have you heard of AmeriCorps? AmeriCorps is absolutely worth investigating as an alternative way to find some money for college. And if you live in Weld County, I do want to point out something called Bright Futures. So anybody who lives in Weld County, watch for that website at the end. Be sure to check out Bright Futures. And then I want to caution parents that the concept of paying for your child to go to school is a very personal, individual family decision. And it's kind of a dangerous trend that we're seeing now, is that parents and grandparents are putting their own financial health, particularly their retirement money, at risk in order to send kids to school. Please, 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 as a parent or grandparent, consider very carefully how much you can really contribute to a student's education. Okay, so hey, saving up money and being able to apply that to expenses means you take out fewer loans, right? Some ways we can think about cash is income, the savings you've built up, summer jobs, everything you can do that's in kind. You know, you fill your kid's gas tank, all of those kinds of things, drop them off a bag of groceries. All of that is one way you can help reduce a student's burden. If you're saving for your child's education, I'm not going to go into these in depth. You can email me and talk about them later, but most of the people attending tonight are not so much interested in these savings plans to send your kids to school. You should just know that Coverdell accounts and 529 plans are each tax advantaged. They both have the option of applying to K-12 school, both public and private and religious faith-based schools. And they certainly apply to college expenses. There are very, very specific individual approaches within each of those. And so I don't want to dwell on those tonight. Just know that those are common ways that parents are using to save to be able to send their kids to school. If you haven't got this pile of cash, maybe your last name isn't Musk or Zuckerberg or Walton or Bezos or Gates, you are actually going to have to find a way to pay for your kids' education or your own education. And it's going to take more than what you've been able to save. So let's talk through the options. Let's start with the free money. Free money is grants. We don't need to repay them. Grants are usually based on financial need, although they may be based on something like military service. That you've probably heard of Pell Grants. It's a federal grant, needs-based, financial needs-based. Besides grants, the other free money are scholarships. Don't need to repay it. So a little different than being based on financial need. These are often based on some kind of merit. Might be an athletic scholarship, might be an academic scholarship, art, but some merit that qualifies you to receive this scholarship. So please, please, please turn over every rock. Look under every possible way you can come up with to find scholarships. Credit unions have scholarships. Trade groups like for an accountant have scholarships. The auto parts manufacturers have a scholarship. Civic groups have scholarships. They're everywhere. Almost every school has a financial aid office where there's a generic application and what you fill out gets matched up with the scholarships that are available. So maybe you're a redhead that was born on Tuesday and is going to teach underwater basket weaving. You know, there's a scholarship for you there. And nobody else is going to qualify for it. You're the only one. We just have to find a way to match you up and locate it. The other thing I want to point out is something called work study. Seems like everybody that participates in work study is very impressed with how much it helps. The concept is that it's a piece of government financial aid. It allows you to work usually on campus, part-time, and the funding, partial funding for that job comes from the government. So it's a great way to pick up a part-time job for a little extra pizza and beer money. And it's geared for people who are students. They understand you need part-time work. They understand you have to work around certain hours. So work study is a really valuable option. Okay, if we get through all those, we're out of free money. Now we have to start talking about loans and going through a repayment process for the money we're using to pay for college. So, hey, I bet you've heard of FAFSA. The government financial aid process starts with FAFSA. The free application for federal student aid. Notice it's free. If you're getting any payment requests, it's a scam. You need to apply every year that you're going to be receiving aid, and you apply early. Notice the dates there. October will be here before we know it. So you're using prior tax year returns to report your income, and be sure that once you've filled out FAFSA and you've received back a student aid report, make sure you look at that, make sure it's accurate, that you didn't make a mistake, put in too many zeros, something, because that's what the schools are going to base their offer letters on. It's going to have your expected family contribution, and then you start getting offers from schools and you evaluate those to see what package you want. So it's going to include the cost of attendance, it's going to include grants, scholarships, work study, and how much you qualify in loans. Please keep in mind that although they may offer you this much financial aid, you don't have to take it. If you look at your numbers and go, you know, they offered me a $15,000 loan and I really only need 10 or I need 12. Please don't take more than you need. It really can impact how much you're paying back, how much it costs you to pay back. So I want to make one other comment when you're considering those offers that are coming in from schools. Traditionally, we consider public schools and in-state schools to be a less expensive education option, but depending on the aid package that is offered by a school, it is absolutely worth your time to review offers that come from private schools or come from out-of-state schools. So don't be afraid to apply and review and analyze. Sometimes those institutions have some kind of fantastic offer they can make you. So just a consideration.
And quick question, Nancy.
Yeah.
Do you include you do not include retirement funds in the assets, correct?
Correct. And those 529 plans that people have set money aside in, they are viewed very favorably. They are considered when the expected family contribution is looked at, but it is a very favorable calculation. There are a couple other strategies that are a little more complex, and I'd be happy to talk about that at the end. Or Some of the things that we're hearing is that because they're looking at prior tax returns, if you can do some kind of funding for the first couple years, taking advantage of all the monies available, but by the time you get to those last few years, you could receive gifts, you could have healthy income, and it won't affect because you're using information from 2 years prior. So I hope that made sense, but that's one of the tactics we're seeing is that if the grandparents want to give you a bunch of money, maybe hold off till those last couple of years so it doesn't show up in your account.
Great, thank you. And if you have follow-up questions, feel free to continue to pop them in the chat.
Yeah. Okay, let's talk about loans. Right now, about 95% of the student loans that are given out are from the federal government. Only about 5% are private. There's a very good reason for that, which we will talk about. It is important to consider how much you are taking out in loans and what you think your earning potential will be. It's really frustrating after graduating with a degree and you get a job and it's a $35,000 a year job and you have $100,000 of student debt. It's a very uncomfortable place to be. So please do some research early on about what the earning potential is of the degree you're studying for, and do your very best to not be so far in debt that that's not a good fit by the time you graduate. The current loan types, if you were to get a loan today, they're called direct loans. They come from the government. Subsidized means that the government is not collecting interest while you are a student and have that loan. Unsubsidized means that interest is accruing and being charged even though you're still a student. Plus loans are for graduate students and parents. And then consolidation loans are a way to kind of lump things together instead of being into so many separate loans. We're going to dig deeper into each of those types, talk through, hang on, it gets really fascinating from here when we talk through all those different loan types. But to break things up, let's actually ask a couple more questions. Poll number 2 coming your way. I made it easy. There's 3 questions. Sorry, I didn't make this one easy. You still have 3 questions.
Perfect. We're about halfway there, so we'll give you another 30 seconds and then share the results. Thank you all for participating. Give it about 10 more seconds if you haven't answered yet. Do it in 5, 4, 3, 2, 1. Awesome. Yeah.
All right. So 3 of you got it right. Would you believe that the current lowest rate on a new student loan is 2.75%? Oh my goodness. So we'll talk about that some more in a minute. Jaw-droppingly low. Standard repayment plan. Ooh, you're about half and half. It is not 15. We will talk about that in a minute as well, but it is not 15 years on the standard plan. And maybe, the maybes have it. We will also talk through in a few minutes about why it is that you might make all your loan payments and then watch your loan balance increase. So thank you so much for taking time to share some opinions there. And onward, talking about direct loans, the ones that come from the government. I guess the good news is if you're thinking about getting a loan tomorrow, rates drop almost 2%, really close to 2% lower than last year, and they had dropped last year from the year before. As of right now, those direct subsidized loans for undergrads are 2.75%. If you move into the unsubsidized and you are still an undergrad, it is still 2.75%. If you move to a graduate unsubsidized, now we're at 4.3, but again, that is 2% lower than it was. And plus loans are fascinating. Those are the parent loans and the grad loans when you've run out of the other two categories, and those are running 5.3. Again, 2% lower than last year. So just like we looked at grants and scholarships being free before we get to loans, now that we're in loans, we want to use the lowest interest rate available to us, the best terms and deals that are available to us. So we already talked about the rates, which ones are the best. You will notice that some require a credit check, some do not. You'll notice that some accrue interest right away. Those that do not accrue interest are going to be your best bet. The other thing you want to consider is that thankfully all of these that we're talking about qualify for the income replacement plans, that income-driven replacement plans. So we'll talk about repayment plans. We'll talk about those in a minute. But again, things to consider, you know, are you an undergrad? Are you a grad? Have you maxed out your subsidized? Now you have to move to unsubsidized. So, and the consolidation loans are a little interesting because they actually, as you have graduated and now are putting multiple loans together into a consolidation, there are several things to consider. It will depend, the rate will depend on the loans you're putting into it and which loans have a higher balance. So if you had a loan that was a high balance at a low interest rate, you may not want to put it in a consolidation loan because it would actually, the interest rate would likely go up. So some very careful calculations need to be done about which loans you would include in a consolidation. And then a comment for, again, the parents whose 18-year-old is telling them, yes, yes, I promise as soon as I graduate, I will start paying you back on that loan. You won't have to pay that loan. Please be doubtful of that. Please don't take out a plus loan unless you can, in fact, plan that you're going to be repaying that loan. And then these are all government loans. Private student loans right now are vary tremendously. It depends on credit score. It depends on some other things. You can get a fixed rate loan from like 4 to 12%, but there's sure a big difference between 12% and less than 3%. So we are avoiding private student loans if we can. Variable rates, you can get into variable rate loans with the private ones, but again, some challenges when you go that way. They're going to require co-signers or credit checks. And I think it is interesting, even the private loan companies, when you talk with a private lender, they are going to caution you, have you used all of your federal money? Have you checked out all the federal loans available to you? So that's where we start, always with the federal, better rates, better terms. Okay. This is how the process is supposed to work. You fill out your FAFSA, you get your student award letter, you get your college award letters, you make your decision. Yes, I'm going to CSU. They made me the best deal. You attend college, you graduate, you have a degree, you get a job, and you pay off your loan. It's easy peasy. That's the way it's supposed to work. Here's a little more realistic look at how it works. First of all, don't forget that you have to reapply with FAFSA every year that you are in school. You will take out multiple loans likely, not a single loan. You will be using your savings or your income. You'll make that cycle for as long as it takes until you actually get that diploma. And then you're theoretically going to go get a job. Your loan servicer is the person, the company that you make your monthly payment to. So once you have your job and you start paying your loan servicer, paying back the loan, boom, that's supposed to just get the loan paid off. what we're seeing is increasingly a situation with plaid shirt guy. Plaid shirt guy is having a bad day and having trouble making his loan payments. And so he's going to talk to his loan servicer, and they're going to figure out a plan. They're going to come up with a way to solve the current situation that has him in trouble, and still the loan gets paid off. All right, that's what we're about to dive into, is all those alterations and possibilities on how we can change up our monthly payment if the current loan payment plan isn't working. So it's heavy duty material. Let's do one more poll before we get into that one. Oh man, I made these hard. I gave you 3 questions on all of them. Oh no, 2. There we go. It's the easy one.
And I know we've covered a lot of content, so if as you're answering poll questions, you have other questions, again, feel free to pop those in the chat and we'll answer those throughout the night as well. But if not, no worries either. Looks like we're about halfway done, so we'll give you another 30 seconds or so. Well, actually, you all are pretty quick. Say 5, 4, 3, 2, and 1.
Okay. Oh, yay. At least half of you know that it's the National Student Loan Data System, NSLDS. It is we'll talk about it in a second, but a valuable resource. If you don't know about the National Student Loan Data System, you should, and you will in a few minutes. And good, most of you know who your loan servicer is. It should be who you're making your monthly payments to, and we'll talk some more about who the most common loan servicers are and what they can do for you, because theoretically they are your friend. And they're going to be a great first stop for you on a lot of this if you're looking at changes. So thanks for voting. Let's dive into all these different situations that can happen. So here's that National Student Loan Data System. This is your one-stop shop for all things related to your federal student loans. It does not have your private loans. It has your rates, it has your balances, who your loan servicer is. Everything about your federal student loans is on this one site. So that's a great resource for you. Besides looking here on this site to do your own research, you can contact your loan servicer. There are only 10 of them, and the top 4 are probably names you will recognize: Nelnet, Great Lakes, Navient, and Federal Loan Servicing. Those are the most popular ones. So probably one of those is who you're sending your payments to. And they are supposed to be very knowledgeable about how to help you if you're having trouble making student loan payments. By the way, I trust everyone is aware that with the current COVID situation, all federal student loan payments have been put on hold until the end of September. So it is your choice. You can pay your student loans right now if you are able and want to keep up doing that. If it is a hardship at the moment, you're still good for July, August, September. Don't have to make a payment. Okay. So plaid shirt guy was having a bad day. There's so much that can go wrong in our just in our lives. And the challenges, right now are related to the pandemic, but challenges can happen anytime. If we recover from this quickly and a year from now your life falls apart again, keep in mind some of these tactics. These provisions are in place to help you when things go sideways. So let's talk about some of the ways it's set up to function from the get-go. The default is that your loan amount is divided into 10 years of payments. You make those payments, voila, you're done. So the standard repayment plan is for 10 years. And this is going to usually be your cheapest option. You will pay the least amount of interest by doing the standard repayment plan. There are a couple options. You just talk to your loan servicer and say, you know, my loan balance is stretching me. Can we try one of these? So extending the term. So first of all, you have to have more than $30,000 of loans. There were many of you tonight that had more than $30,000 of loans. Instead of being on a 10-year repayment plan, you can be on a 25-year repayment plan, and that will, of course, lower your monthly payment. Then there's something called graduated payments. The concept here is that as you get started in a career, your income is probably lower than it will be 10 years from now. So the graduated payments increase every couple years. They start low. So the first 2 years, you're making a low monthly payment. The next 2 years of your loan period, your payment goes up. And then the following 2 years, and so on, until you're in that final payment period where your monthly loan payment is at the highest amount, but you have been raising that monthly payment gradually over a 10-year period. And then those consolidation loans, remember the repayment terms are going to vary on that. So it's really going to depend on what you're putting into the consolidation loan.
And quick question,
Sure.
just to go back a little bit, if you wanted to make your loan term 8 years instead of 10, would you pay more interest on that?
No, you would actually pay less because you would be paying earlier. That would, as far as I know, you wouldn't have to redo the terms. I would just pay ahead.
Great, thank you.
Yeah, but triple check with your loan servicer to be sure that paying in advance is not a problem. I can't imagine that it is, but I am not a loan servicer and I'm not the federal government. So, but I can't imagine there would be a problem with paying ahead, and you would just self-figure out, I want to be done in 8 years. I'm going to pay this much more than my minimum payment. So all of these options lower your monthly payment. Well, the consolidation is questionable about that, but the extended and graduated lower your monthly payment, but you will likely pay more interest over the life of the loan. So you have to balance which one is more important for you in considering that. Let's talk about more ways to lower your monthly payment. Okay, I bet you've heard of public service loan forgiveness, and we are definitely going to talk about that soon. But if you are considering public service loan forgiveness, then you must be in one of these income-driven repayment plans, because otherwise, when you get to having a loan amount forgiven, there won't be anything to forgive unless you get yourself into a lower monthly payment through one of these repayment plans. So let's talk about these plans. Each one of them, you'll notice that the term is different. We are not talking about 10 years now. We are talking 20 to 25 years of repaying your loans. They have different features, so you need to figure out which one is exactly right for you. They all consider the income that you make, but they do consider it differently sometimes. You'll notice they consider the family size that you have. And you'll notice that your monthly payment is anywhere from 10 to 20% of your discretionary income. But again, it depends on which one you're in, okay? It's really important that you look at that last column. If you get to the end of your loan period, 20 years later, you've been paying on this loan at a small monthly payment, and the amount is forgiven, say there's $12,000 forgiven at the end of the loan, it is very possible that that will be added to your income that year, and you will need to be taxed on it, and it will be as if you made $12,000 more that year than you really earned. That's how that tax situation works. The other consideration is that most of them, there's one that doesn't, but most of them consider your filing status. And so therefore, when they're doing the calculation of what is 10% of their discretionary income, if you are married filing jointly, 10% of two incomes is much higher than 10% of one income. So you need to balance out that consideration in choosing which one you would get into. There is only one on the chart that is eligible for plus loans. So if you have a plus loan that's giving you trouble on the repayment, you have only one option on your income-driven repayment plan. Okay, that was a lot of detail. I hope the chart is helpful. You'll notice those are several variables. They depend loan by loan. Oh, by the way, it's pay as you earn and repay as you earn are those acronyms. Let's see if there's anything else. You do need to update your information every year. So you turn in information every year about your income, your family size, so that that loan payment could be readjusted. If you tripled your income, obviously you have more discretionary income and your loan payment would probably go up. It is recommended, because of the tax situation, filing jointly, filing separately, and the possibility of being forgiven that loan amount, it actually is encouraged that you talk with a CPA before you would choose which one of these was the right choice for you. Okay, we made it through that. You ready for some more options on how to lower that monthly payment? So when you're having trouble with a monthly payment, deferment and forbearance are intended to be short-term solutions. Those income-based plans, remember we were talking about paying for 20 years. Deferment and forbearance are intended to cover a short-term situation. It could be that you've lost a job, started school again, maybe you've been deployed through the military, maybe you have a medical emergency. There's some event that has made it difficult for you to make your monthly payments. And so your loan servicer can help you understand whether you want a deferment or forbearance. You'll notice one of the biggest differences on those is whether interest is accruing. So some considerations there. Okay, I saw chat light up. Do we need to ask anything before we talk about public service loan forgiveness?
We do actually. So the question is, I'm just going to read it word for word because it's a bit specific. But if I have 8 federal loans, some subsidized, some unsubsidized, can I choose which loans to pay off first, or do I have a choice at all?
Your minimum payments on all of them are due. So you need to stay with the minimum payments. Depending on the situation you're in, you may look at a consolidation loan and see if it would save you money and it would simplify your payment because you'd only have one. And then you'd have a focus, or yeah, that's a great question, but you have to make payments, yeah, at least the minimum payment on all of them. And then you can decide if you want to, so this is a concept of paying down debt, avalanche and snowball. You can either pay down the smallest loan so that you feel great and get rid of it, or you can pay extra on the highest interest rate, just depending on who you are and how you feel about things like paying interest. Or if you need that quick win, pay extra and get rid of that smallest amount. So different strategies, but absolutely no reason you can't pay ahead if you can afford it in a monthly payment.
Wonderful. And then the second question is forbearance only for mortgages?
So forbearance is one of the terms in the student loan situation. Traditionally, you are correct if we are talking about, for instance, a car payment, a car loan that's being looked at in a grace period kind of thing, and a mortgage that's being looked at in a grace period. The terms are different, and forbearance usually talks about mortgages. But in this case, it's that's the term they're using for the student loan delay of paying process. Studentaid.gov is a website that we're going to suggest for absolutely everything. Studentaid.gov. It's on the resource slide at the end. It has details on everything. And it's from the people themselves, the lender, the government. It's their site. So the answers are there. They might be deep and complex and take a little looking, but the answers are on studentaid.gov.
Thank you.
Okay. So let's jump into the loan forgiveness programs. There's two of them. I'm going to start with the easy one. And I don't know if any of you are teachers, but or know someone who is a teacher, but the teacher loan forgiveness program is geared toward getting teachers to commit to low-income schools. And so if you work for 5 consecutive years at a low-income school, you can receive up to $17,500 of your federal loans to be forgiven. So you work for the 5 consecutive years, up to $17,500 of your loan amount can be forgiven. So if only the Public Service Loan Forgiveness Program were that straightforward and easy. Let's dive into how that one is set up.
And can I jump in with one more question, Nancy?
Absolutely.
Do you get flagged when you have student loans if you're trying to purchase a house, a car, all the good life purchases?
You bet. So it is absolutely considered. That payment is considered in calculating your debt ratio and in calculating whether you qualify to make a car purchase or home purchase. The other thing I would caution you on is even if you're in deferment at the moment, you are not currently paying your student loans, we will still as a lender look at that and go, you know what, a year from now, they're going to have to come up with the payment. This is a 4-year car loan. So even though they're not paying it right now, I have to take that into consideration as a lender because I know it's coming. Okay.
Thank you.
Okay, so we can't avoid it. Here we go, public service loan forgiveness. There's a lot of question about this. Again, studentaid.gov has all the answers, but I'm going to try to clarify some of the common misperceptions and perceptions. Public service loan forgiveness, the concept is that you are working in a field where you maybe are earning less money than you would have if you'd gone private sector. You're giving your time and your talent to public service. And so as a reward, the government is going to forgive some of your student loan amount. The requirements are that you make 120 on-time, full amount payments, loan payments, while you are working for a qualified employer, and you should be in an income-driven replacement plan. So let's break that down a little bit. 120 months do not have to be consecutive. You do not have to work 10 years at the same place. You do not have to work 10 years all for qualifying employers. So qualifying employers are every level of government, state, city, federal. If it's a government, it could be a public school system, firefighters, the hospital system in Fort Collins, University of Colorado Health is a qualified employer. They're a not-for-profit hospital. So all 501c3 charities. So if you work for Habitat for Humanity or a community foundation. So nonprofits, any government job, and then those public servant jobs, police, fire, hospitals, depending on the hospital. Those are qualified employers. So you have to make 120 full amount payments. You have to be employed full time. What does full time mean? Whatever that employer's definition of full time is. So that may vary by employer.
And a couple of follow-ups on that one.
Yeah.
If they work for the Department of Public Safety, will they be considered for public service loan forgiveness?
Who is it, a state organization? It sounds like a government organization. As long as it's
a city organization.
What, city?
Yeah.
Yeah, you bet.
Perfect.
City, state, county, federal. If it's public, taxpayer money. Yep, or nonprofit. Yep.
And then as a follow-up, what about private medical clinics?
No, Now, I mean, it's certainly worth an ask. You can ask and see if they're set up. So for instance, okay, I don't want to get too far in the weeds, but there are public health organizations that serve the public health arena, and those in all likelihood are. But if you're a private doctor's office that's doing cosmetic surgery, I'm guessing that has no public side to it. That is a private industry. So you will need to double check with your HR, triple check.
I don't know if it's helpful for you. I believe it's Associates in Family Medicine, if you're familiar.
No.
Okay, and then last one, which is again somewhat specific, but does working for CSU count for loan forgiveness?
Yes, it's a public university.
Perfect.
Okay.
Thank you.
Yeah.
Thank you. Thank you.
Yeah, so so if you think about large employers, school districts, city government, federal programs, Colorado State University, these are large employers. And yes, those all count. University of Colorado Health. So the 120 payments that you make do not have to be consecutive. So for instance, you worked for a city. After 2 years, you decided, you know what, I'm sick of this, I'm going to go work. And I use this example, I don't even know if this is possible anymore with COVID, but the Macy's cosmetic counter, you go work there. And after 2 years of that, you're sick of it. So you go back to Habitat for Humanity. Your Macy's payments, the payments you make while you're at Macy's don't count toward the 120. But everything you did at the city and everything you do at Habitat counts toward the 120. Full amount, full-time work, qualified employer. As soon as you hit 120 of those payments, the remaining loan balance is supposed to be forgiven. Okay. More questions?
A couple more. One, does work study count? Oh, I just lost it. Does work study count towards the 120, the 120 days?
No, because you're,
or months.
So work study as an employer, work study is a aid. And so,
I may have asked that question quite poorly. So the direct wording is, does work study count for the time of 120 months for loan forgiveness?
not unless you're working full-time. And so, boy, I would doubt that work study was full-time. So that's going to be the first thing that kicks you out. If for some reason you are, then I would talk to your HR department.
And then another question, if you face criminal charges, can that affect your loan forgiveness?
Not that I know of.
Okay. We're going to give you all the hard questions tonight. The final one is, if you make payments during the this government forgiveness time, will it count towards the 120?
Yes. And it also won't count against you if you didn't make payments during this time. There is no, I mean, you can't count them. If you don't make them, you can't count them toward the 120, but there is no punishment if you didn't make them now.
Okay. And then if you have a spouse that works for the city, could you get loan forgiveness on your student loans?
Nope.
Okay. Thank you. These are all wonderful questions. I'm just going to keep firing them off. Is there any other type of forgiveness programs or just these few?
You know, I think there is. These are the most popular, but I believe there is at least one other. So I'm going to say studentaid.gov, and I'm sorry, I don't remember what it was geared for. Yeah, sorry, drawing a blank on what the other one might be for. A couple other organizations that don't work, although it sounds kind of like they're nonprofits. Political organizations do not qualify, and religious organizations do not qualify.
Great. Thank you. Thank you. I hope this answers all of your questions, but continue to use the chat if not, and I will try not to butcher them as I speak them for you. So thank you all.
And this one is super confusing, and it makes a lot of people angry because they know that a ton of people have applied to have their loans forgiven, and they were not. And what it comes down to is horrible communication about these requirements. And so one of the bonuses I have for you when the evaluation goes out is a document that is many of the common questions about public service loan forgiveness. It used to be posted on the website and it's gone, but I happen to have a paper copy of it. So we'll share that out with you. There used to be like a 40-page document, and this was a 4-page document. And again, studentaid.gov, public service loan forgiveness, all the details. There are odd little quirks that go with this, so it is confusing, but keep those questions coming. We'll see what we can do. Okay, those are the forgiveness programs. The concept here is, look, you do not get taxed. If you make it to the end of your 10 years of paying on your student loans at this reduced monthly rate, and you have $12,000 of loans forgiven, you that does not get reported as taxable income on these forgiveness programs.
And then this question says, I thought that this time period still counted for your payments, even if you aren't making payments because of COVID.
You can check student aid. They have a whole section about COVID, but to the best of my knowledge, they aren't going to credit you for a payment you didn't make.
Great, thank you.
Okay, couple other slides before we get to that resource one. I want to just talk quickly about default. It is not a good place to be if you default on your student loans. It does take 9 months of not making a payment before they consider you in default. If you find yourself climbing up there on how many months you have not made a payment, please, 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 please talk to your loan servicer as soon as possible. They have ways to help. It's, you know, some of these standard options that we've just talked through, but there's a couple other things they can do as well. The consequences are very bad. Please, please, please talk to your loan servicer. I'll have another resource for you as well if you are having trouble, if you are pushing your time on getting close to defaulting on a student loan. I'll have another resource at the end for you to talk to, as well as your loan servicer. There are some red flags to share anytime we're talking about student loans, because student loans are confusing and they're new to you if you're just getting started on them, and they're scary, and anything that has that combination brings out some really bad operators. So they are absolutely a target for fraud and scams, including even the FAFSA process. You'll see people being conned into paying for that. Scholarships, scams, and then of course, as soon as you get started on making your loan payments, somehow the scammers all know that that's uncomfortable and they try to get you to fall for their stuff. Please be very, very careful. This is something that is an exposure to scams and fraud. Student loans at this point cannot be included in a bankruptcy. There is a tiny percentage, like less than 1% of situations where you can include a student loan in a bankruptcy. It is, so I can't use the word never, but you don't plan on that one. Not really an option. Please, if you don't need the money, don't take the money. We know people that the government offered them $20,000 and they only needed 15, but gee, it would be nice to have new floors. So now they're paying back student loan debt because they have a pretty floor. If you don't need it, don't take it. And then a goal is to not take out more in your loan amount, total loan amount, than you would have in your first year of pay. It's a guideline to keep in mind. And then for the older folks who are considering going back to school, either for yourself or you're considering helping a grandchild, it is a scary trend we're seeing, that you're putting your own financial future and your own retirement monies at risk. Students can find a way to pay for school. There's no other income for you in retirement. So please, please be very, very careful of that. Okay, here comes that resource slide. Pull out your phone, take a screenshot, however it is you want to save this, or wait for the evaluation and the PowerPoint to come your way in a couple days. I'm going to talk through a couple things on here, especially if I can expand it big enough that I can actually see it. Having told Alexandra that I knew how to do that before. There we go. Okay. On that careers section, there's a couple places where you can research salaries, see what you can expect to earn. So Indeed, Student Aid, again, they have career search portion of the site. And then that's the Bureau of Labor Statistics, in case you weren't familiar with BLS. And the OOH is something, occupational health or something, Office of Occupational Health. Fascinating acronyms, but they definitely have things about how much money you'll earn or which jobs are popular at the moment. Researching the whole financial aid picture, every aspect of it, studentaid.gov. FastWeb and CapEx were places you could go to find scholarships. Bright Futures is there if you live in Weld County. The nationalservice.gov site is for AmeriCorps. And if you are not familiar with AmeriCorps, I would encourage you, if you're considering about how to pay for school, to check it out and see what options are there. We were just talking yesterday, grandparents even can volunteer in the community, do some AmeriCorps work, and the earnings could be given to their grandchildren to apply to school funds. I mean, it's a very, very versatile way to give back to a community and maybe generate something to help with school. And then the wiki website is the schools that participate in this consortium of Western universities, where although you don't pay in-state tuition, you do pay a reduced tuition to attend schools that are in our region. And in that loan section, we have the college scorecard. It's kind of a way to research the performance of particular schools. So you can look up the schools you're considering and see how they rate based on graduation rates and how many people get employed and those kind of things. Studentaid.gov, there it is again. National Student Loan Data System, excellent resource for everyone with federal loans. Lend.edu is a way for you to research refinancing your private student loans. Private student loans can't be turned into federal loans, but they can be refinanced at a better rate if things have changed, if your credit score's gone up. If you have private student loans that you want to do some research into consolidating or refinancing, that's a place to look. Information about 529 plans. Again, if anybody has more questions about that, just email me. And two resources that are available to help you besides your loan servicer. If you are looking at, wow, this was overwhelming, I know I need to do something, but I don't know what I need to do. So if you live in Boulder County, the Boulder County Human Services Department has trained counselors to talk through student loan options. They've been trained on all these plans and which is a good fit for your situation. So you can talk to Boulder County, the website's there, and get an appointment with one of their trained student loan counselors. The other place, you don't have to live in Boulder County, is Green Path. Green Path is a nonprofit, and they specialize in debt plans and housing counseling and budgeting and student loan counseling. It's one of their specialties. So many credit unions have a relationship with Green Path and either can get you a discount. Their standard fee is $50 to have someone review your situation and help you figure some things out. So I strongly recommend Green Path as a trusted nonprofit to work with, again, trained student loan counselors. Wow. We made it.
Almost. Couple of questions. So the first one is, do adoptive children or godchildren count for the kids count for hours or services given?
You decide who receives the money. So in AmeriCorps, you are making decisions about what would happen.
Great. And then as another question, are there grants or scholarships you can apply for to pay for loans? Or are grants and scholarships just for while you're in school to apply towards total cost?
Yes, the second answer. Yep.
Great.
So we want to use them, of course, because it reduces our student loans. But once we have the student loans, there isn't any free money to help us pay them.
That's all of the questions we have for now. So we did make it. I know we're a little bit before 7. If you have additional questions, continue to pop those in the chat, and we would be happy to answer them. I just want to thank you all truly again for your time. Thanks to Canvas Credit Union for providing the content, and to our members for allowing us to continue to provide programming. I do want to reiterate that we will send out the slides in a follow-up survey. Of course, it is completely optional. But that is, much of our programming comes from direct feedback. So if you have other topics you'd like to see, additional questions, feel free to pop that in the survey. You will not get that if you registered through Canvas and did not fill out the CSU Alumni Association link. So if that's something that's important to you, please go back in and fill out the link. And then we will also pop our emails into the chat box. So feel free to follow up that way. But thank you all again. We'll keep answering questions. Stick around if you would like, but if you have to hop off, I know there's a little bit of daylight left, and so we appreciate your time and energy. Thank you, thank you. And to go back to questions, where can they go to apply for public service loan forgiveness?
So you're going to want to read the studentaid.gov site, but basically what you're doing is tracking your own payments, the fact that you worked for a qualified employer for this many payments. There's a form that an HR department can help you with. Is there anybody who's currently doing that and can give more specific advice about how you got started? I've been told that it's really critical that you do your own tracking and watch, because you want records. If it was a while ago that you worked somewhere that would qualify, please go back to that HR department, get proof that you worked there full time during that time period, so that the payments you made, you can match up and say, no, these payments count. So anybody have any experience with how they actually got started on that? Theoretically, you don't have to do anything until you're done with your 120, and then you send in payments, but nobody seems to think that that's a great idea.
And if not, we'll just take that as a parking lot question and make sure it goes out in the follow-up survey as well. But if that is something you have experience with and want to hop on, feel free to pop it in the chat, and we can always elevate you to let you share some of your experiences, if that's something you're comfortable doing, of course. Perfect. And I think we've covered all of the questions. If you have any last minute questions, pop them in. Oh, here we go. What should you look for to prevent being a part of a scholarship or grant scam?
So if they're charging you for something that really should be free, so for instance, on the scholarship scams, pay us this much and we will make sure you get a scholarship. It doesn't work that way. The same with, FAFSA. Oh, we'll make sure you get more money, more loan money, more student aid. Doesn't work that way. It's a free application and you just put in the numbers that you know. They are very specific formulas they use. Yeah, anything that is making it sound like a guarantee that they're going to get you something special, I wouldn't trust it.
Do you have any specific advice on lendedu.com, specifically for someone who has 2 private loans, and one federal, and has been paying close to $1,000 a month for 10 years, but still has $50,000 left to pay.
Okay, so rates dropped. So I would, you can go to Lend.edu. You can just plain old Google who's got refinance student loans. If you have a credit union or a bank that you trust, you can ask them, you know, is there any product you have that I can refinance my student loans? Do you have equity in your home? You might not be able to get a tax credit for it, but you might be able to change it over to a home equity loan. Lend.edu should be a compare different rates site. One of the first things you're going to want to do is know your credit score and be sure you have that, so so that you can look at options. And I hope that helps.
And then can you refinance your loans multiple times or only once?
Ooh, it depends. Private loans, you can do anything you darn well please. Private loans are just, you're working with whatever private lender is going on. If you refinance government loans into a private situation, you no longer have government loans. If you change your monthly payment planning, if you change how they're calculating your monthly payment, like an income-driven replacement plan or moving to extended term instead of the standard term, those things are free and those things can be done multiple times where you can switch around. If you go into a consolidation loan, my understanding is you can't undo a consolidation loan. So the person who said they had the 8 different student loans, and if they put that all into one consolidation loan, done.
All the logistics.
It is.
Any final questions? I know that we have a little bit of time, so definitely want to make sure to address your questions if you have them, but don't want to hold you if it's not fruitful. I think you've had some great questions, kind of thrown Nancy all over the board. I just get to read them. So if you have any last minute questions, feel free to pop them in. Otherwise, both of our emails are in the chat, and always feel free to respond directly to the email with the survey. That will come to us as well. We are more than happy to answer questions after the fact. If you have other financial topics you're interested in learning more about, we have some of those coming up. We're doing a home buying workshop, an investing workshop, a workshop looking at the current state of the economy. All of those are available on the CSU Alumni Association webpage. All are free to attend. But thank you all and have a wonderful night.
And I just thought of something else, but I can't remember now what it was.